Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. I hope you guys are all doing well. In a video I look forward to making every single month are the stocks I'm looking to buy for November 2021. And every month is a little bit different depending on what I see in the market, where I'm seeing opportunity. And sometimes I'll do 3 stocks, 5 stocks, and today I think it's going to be 6 stocks, I believe. So we're going to get right into it. If you're new to the channel, and welcome aboard, hit that subscribe button here at Unlimited Options Investing. We talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. And as always, smash that like button. Guys, let's get started. All right, the first stock on the list we have is PayPal, ticker symbol PYPL. It trades on the NASDAQ, and it's currently trading at $232.59. It has a market cap of $273 billion, and if we look at, let's say, the last year, we're up 23.88%, which is awesome. However, since, let's say, the end of July, we are down about 24%, reaching a 52-week high of 310 and a 52-week low of 174. That was at the beginning of this year. And PayPal is awesome. It's a financial technology company operating an online payment system in the majority of countries that support online money transfers. When you take a look at the top 50 companies in the S&P 500, you see that PayPal makes the top, let's say, 20. And when we take a look at the top 10 holdings of the NASDAQ 100, Apple, Microsoft, of course, Amazon, Tesla, Facebook, Google, Nvidia, and PayPal. So it's right up there as one of the biggest companies in the world. Heading over to Yahoo Finance at the valuation measures, it has a forward PE of 39.68, so it does trade pretty rich, but it's definitely considered a growth company, trading at a price to sales of 11.59. And it definitely is expected to grow, with revenues in the current year growing 20.2% and for the next year at 22.8%. And looking at the financials, we have total assets at the end of last year at $70 billion and total liabilities at $50 billion. And as it says here, that is driven with massive growth, in this case in active accounts, doubling from 2015 to 2020. Their customers are using their products more, making them more sticky. Fintech or financial technology is here to stay and is going to be a growing theme over the upcoming decades. Not to mention cryptocurrencies and all that, and how all those ecosystems are going to fuse together in the network. It really gets you excited about the future in a way. It's kind of scary, but also exciting. So even though over the past year it has been doing really well, we see that it did reach the top earlier in February, and it tested it again and found selling pressure again in July. And since then, again, we were selling off, I think it was 25%, as we said earlier. There was a bit of a trend line here, and it broke right through that on really high volume with the whole Pinterest news. But the volume has been declining, and we are reaching a pretty critical support around, let's say, this $227 mark. So if we do get to that point, that could be a very excellent buying point. So I'm really looking at this one technically because it has been showing a lot of weakness. And it's a really strong fundamental company to be holding over the next 3 to 5 to 10, 15, 20 years probably. So that's PayPal stock. The next one we have on our list is Facebook stock, ticker symbol FB. And the company is now actually called Meta Platforms. And the ticker symbol is also going to be changing to MVRS, short for Metaverse. And I believe that's happening at the end of November, maybe I think the 1st of December, one of those 2 days. I do talk about Facebook stock a lot on this channel. Again, Meta Platform stock a lot on this channel. I do believe it is very undervalued for a mega cap company. It has a market cap of $900 billion, a 1-year target of $403, and I don't believe it putting too much merit into these 1-year targets. However, I just believe this one at a valuation of a forward PE of 22.68 is just too hard to ignore. A price to sales of 8.3 for a company that is attempting to build the next big thing in the metaverse. And as a business, they are just so powerful. Now, politically, I know there's a lot of backlash, I know there's a lot of issues, and I know it will weigh on the stock and create a lot of volatility, but over the long term, I believe this one is a strong winner, especially at these valuations. Looking at the technicals, this one has been beaten down over the past, let's say, 2 months now. Once at 380 all the way down to about 308, I believe, and then rebounding now to about 323. Was a 308 a potential bottom? Absolutely, it is possible. But it is also important to know that we are in a strong downtrend still. And I should actually probably draw the trend line maybe over here even. So until we break this trend line and open and close above this 20 EMA and above this 50 EMA. But it is definitely possible this could have been a bottom, but maybe we trade sideways, or if we do see more weakness, the 300 level would be my next area of interest for buying Facebook stock. Alright, next up we have Amazon, ticker symbol AMZN. It trades on the NASDAQ and it trades for $3,372 US. I don't understand why they don't split the stock, but anyway, it has a market cap of $1.71 trillion. It has a 1-year target of 4,145, a 52-week range of 2,881 to 3,773. And taking a look at the last year, it's pretty much been range bound anywhere in between this $3,000 mark up until, let's say, 3,500 or as high as 3,700. And as we covered earlier on the channel, Amazon actually had some pretty bad earnings as they missed on their top and their bottom lines. AWS and their other services actually saved them this quarter, as they've been facing a lot of issues with labor shortages, increased wages, and every other macroeconomic problem right now, inflation and so on. And taking a look at the forward PE, it's actually pretty cheap when it comes to Amazon stock, as in the past it's usually been much more, over 70, 80, 90, 100. And a price to sales of 3.90. And it goes without saying that Amazon is a growth monster, growing revenues at 23.2% this year and 18.3% next year, and will continue growing over the upcoming decade pretty much. However, they are facing a lot of short-term headwinds, so taking a look at the charts, taking a look at the candlesticks, you might be wondering, why would I want to be buying at these levels over here? Because in my opinion, taking a look back at Amazon, and we can look at the weekly, this one can trade sideways for a while, but it does eventually continue ripping higher and higher once it does consolidate. And I believe right now we're in that consolidation mode, and then once it does break these all-time highs of 3,800, that this one could see upwards of 4,000. However, at first we'd have to break levels of, let's say, 3,500 and so on. Seasonally, Amazon is strong in the months of November. We have no idea if we've already put in the bottom, or maybe we do see continued weakness. But I am pretty confident, again, with all these headwinds, they are going to be very temporary. I really wouldn't be surprised to see the stock eventually break these all-time highs. And taking a look at the last couple of days, there was increased volumes as earnings were on Thursday after hours, and on Friday we actually gapped down a lot lower. We had a little bit of weakness, but then a lot of buying pressure, and now we're right at those moving averages. Anything is possible with a stock. Anything on weakness, you just buy up Amazon. The closer to 3,000, and if we get lucky below 3,000, are excellent potential buying opportunities, but no guarantees we ever get there again. Alright, next up we have Starbucks, and this one goes without saying. Most of us know what Starbucks does. They are a chain of coffee houses. They've established a pretty strong brand in America and worldwide. And this one on earnings fell 7% as they had a weak earnings outlook. And they're facing short-term headwinds such as hike wages, and the company's forecast for its fiscal 2022 earnings was later than expected, reflecting inflationary pressure and investments such as the wage hike. And this is similar to what Amazon also said. It's better to do this investment right now as customer mobility is increasing, and we believe it's the right strategic bet to take. As in, there are necessary costs right now that will benefit the company in the future. Starbucks has a one-year target of $129.25 with a 52-week range of $85.45 to up to $126.32. It's trading at 28.65 forward PE and a price to sales of 4.63. It's growing very steadily, with the current year of 2022 at 10.3% and 2023 at 9%. Not to mention, this is also a company that pays dividends with a yield of 1.85%. So if you believe there's value of Starbucks at $106, you'll be receiving a pretty nice dividend as well as some very nice growth. And this is Starbucks, in my opinion, one of the greater consumer discretionary companies in the United States. And looking at the candlesticks, we see that it had a big gap down from $112 all the way down to about $107 and selling off a little bit more, finding some buying pressure at $104 and closing on Friday at about $106. And when we zoom out, we could probably put a line of potential support at about $104. We could draw another one at around $100, as well as another one at $95. So we'll have to see how this one trades over the upcoming days, and if we build a base or if we climb higher or lower and collect more information that way. I actually sold a put option at $104. We also noticed a very high volume as a result of the earnings call, and the RSI now below 30. And the last company on the list, we have Lemonade stock, ticker symbol LMND, and they are an innovative insurance company with a market cap of $3.83 billion, trading at $62.16. Their company relies heavily on artificial intelligence and caters to millennial customers, and looks like it's going to be a major disruptor of major insurance companies. It is a hyper-growth company. It's not profitable yet, and it has a price to sales of 42.5. So it still could be very early days for Lemonade. It could potentially fall another 10, 20, 30, 50, 60, 70%, who knows? But if you have a 3 to 5 to 10 year horizon, this price could look like a bargain down the road. And you won't care whether you bought it at $60 or 40 or 30 or 50. Also, assuming the company continues to execute over the years as well. And taking a look at the candlesticks, we see a 52-week high back in January of $187, and ever since then, we are now at $62. What a downfall, down 66%. So right now we could probably draw a downtrend down here. We have a nice support of $60 that we've hit 1, 2, and 3 times now. So it'll be interesting to see if we coil in this area and if we break up or break down from here. So those are some stocks I'm looking to buy this month, November 2021. Let me know in the comments below what your thoughts are. Are you looking to buy any of the same stocks, or did I miss any? Let me know. As always, smash that like button, that subscribe button, and I will see you in tomorrow's video.